Before I give or hand over to Ross this morning, I wanted to ask you guys. I had a question from someone last week who said that they would like a deeper dive into the numbers, into the detail, and I thought to myself, well, I'll enable a poll later on to say that the actual research piece that we distribute has all the detail and the numbers, and we'll share that after Sean's bit this morning. But just as we go through the presentation, just think about it. If what we're giving you really helps you in making a decision, whether it keeps things simple for you, which is in most cases better to make a decision based off that. But if you really feel the need to have a deeper dive or a more analytical discussion around this, then please voice your opinion in that poll when I do open it. So just let your thoughts go in that direction. But in the meantime, Ross is going to update us on Naspers, Prosus, and then Sean's going to do the technical bit. Then I'll open that poll, and then we'll go to Q&A. Thank you very much.
Is that over to me?
Yeah, that's you, Ross.
All right, thanks, Cyril. Good morning, everyone. My name is Ross Mankola. I cover Naspers and Prosus, as well as some consumer staple stocks, some healthcare stocks, and tech in general, which is more or less where Naspers and Prosus sits in South Africa. But I'm going to dive right into it. So we're going to speak about Naspers and Prosus, and when I do so, I'm going to use them interchangeably because they are essentially one and the same company with basically one small difference. But I'll touch on that in a moment. So the last time we had a chat, that was about in Jan this year. So we've had 6 months since then. And if you cast your minds back to January, what had just happened with Naspers and Prosus was that Tencent had been placed on the Chinese military list, which caused significant share price devaluing, dropping quite significantly in the middle of January, and we sort of had a nice recovery since then. And since then, a couple of things have also happened. We've had the full year results. The new CEO, as of October last year, has been on a bit of an acquisition spree, and he's bought 2 companies. So he bought Despaga, which closed in May of this year. So it won't filter into the full year results, which end of March. And he spent about 1.7 billion on that, a 33% premium to the share price at the time. And that should bring about $700-800 million in revenue to Prosus' financial results. Then he also went and bought Just Eat Takeaway for about 4.1 billion. They do about 3.8 billion in revenue, but they still make an operating loss. So you'll see in the next year, you're going to see quite a nice significant increase in revenue from Prosus. But that operating and EBIT line will probably remain very, very, very similar, other than the growth in the rest of the books. But the results are pretty good. I think everyone has digested those. A 21% increase in revenue. EBIT's now gone positive. That's from $118 million loss to $180 million profit, and they doubled their dividends. So the talking point with Prosus and Naspers for quite a while has been, you've got the value of 10 cents, and then you've got other, which we call the rump. And the rump for a very long time, which consists of a host of companies, has not delivered any profits. So you've had this discount because you got the value of 10 cents, and then basically the other businesses losing value and not adding to value. But we've sort of reached a turning point with that now. So we've had a significant change in our intrinsic value, and that's mainly because of 2 things, that being 10 cents done incredibly well in the last year. And also they've been buying back a lot of shares, which has been the theme for the last 3 years now. So we changed our holdco discount, which I'll touch on a little bit later. But that's obviously changed our intrinsics quite significantly, but we still have a fair value of just under what it is at the moment. There are still some issues, which I'll get to. So this was their results, which they quite recently released. It was on the 23rd-ish of June. So the main talking points, is that EBIT changing to a positive value. You've got their food delivery and classifieds, which are adding to the EBIT. And then a couple of other ones that are still attracting, but that's finally turned into a profit. So you got increase in revenue and finally some adjusted EBIT, which will add value. If you look just at the bottom, that's basically the discount, the difference between Naspers and Prosus. Naspers's full year revenues will be up slightly in that e-tail division. So they do 3.3, but they still have a negative EBIT. That's basically Takealot and Mr. Delivery, which are not turning a profit. So we still put a zero value on those SA assets. Quite tough businesses to be in, especially with Amazon coming into the country now. This is basically just a summary of what I've just said. You can see Prosus's market cap is about 120 billion euros, but just their value in Tencent is about 136, 140. So logically, it doesn't make much sense, but that's usually what happens with holdcos. They do trade at a discount. And that's what management has been criticized for in the past, is basically just being destroyers of value rather than creators of value. But they're doing a pretty good job at the moment by buying back all these shares, and the share buybacks are very significant. It's not very often spoken of, but almost 30% of the entire company has been bought back in the last 3 years. We mentioned the change in the intrinsic, and it's very much down to this. And this will reflect in a chart I'm going to show you in a moment. It's just the narrowing of that discount to NAV. There's always been a discount to NAV. In my last report in January, it grew a little bit, and that was because of the Chinese or US placing Tencent on a Chinese military list. And in the last 3 to 6 months, Naspers and Prosus have quite significantly outperformed Tencent. So the maths has sort of have shown or led us to high intrinsics and less value being placed on the Tencent holding and more on the Naspers and Prosus holding. But their portfolio of assets have done quite well in the last. This is a 3-month table. But you can just see how everything other than Meituan hasn't done so well. Tencent's been pretty much flat, but the rest of their stuff has done pretty well, including the two companies being discussed right now, being Naspers and Prosus. So you've had, just in the last couple of months, you've had a 20, or let's call it a 30% increase. So happy shareholders, we happy shareholders. But it's been a rough ride, or not a rough ride, a volatile ride in the last year. And this is basically the crux of Naspers and Prosus. It's been like this for, you can see, more than 5 years now. They started their share buyback program in June 2022. So you can see where these significant dips and rebounds happened. They changed their shareholder structure, which used to be very complicated. Now it's been simplified quite significantly. But over the last 3 years, you can just see that discount to NAV just slowly creeping or getting narrower. See, that's negative, so it's getting less negative. And we're almost at the point now where it's at the narrowest it's ever been in the last 5 years, which helps investors and makes a more compelling case. Well, the flip side of that is they are selling 10-cent shares. But if you look at it from a broad perspective, it's decimal points. They basically sold 2-3% over time. I took this from I quite like this. This was from the year-end presentation. They just Franco Bliossi just highlighted that they have the biggest share buyback program in all of tech. Now this is over the last 3 years since they started their share buyback program. But when you put it like this, 29 and 27% of the entire company has been bought back. So essentially over 3 years, 29, your earnings per share has gone up 29 to 27% just based on a outstanding share count number. When you compare that to the likes of Alibaba and Alphabet, who also have big share buyback programs, it just puts it into perspective how large they're doing this. So this is what investors have been asking for a very long time. This was when Bob van Dijk was still the CEO. He got a lot of pressure for this, but they're doing this slowly and consistently. And if you want to dive deep into the numbers, every Thursday they release a regulatory update telling you exactly what they've done. In our report, you'll also see that in the appendix, there's a huge summary of it dating back to June 2022. And you can just see how much from a monetary value these guys are actually buying back in shares. It's billions. So it's nice to see management taking investors' concerns into account. I'm not going to spend too much time here, but this is essentially how we get to our intrinsic. You can see the SA assets are still at naught. We have narrowed our holdco discount. That used to be, I'm not sure if you can see my marker, but that used to be 42% at the bottom there, now 37. We're still going to hold, or we're probably not going to change. We apply a 10% discount due to the VIE structure, which will always be a concern for us, as well as a 5% discount. The fact that Tencent is a strategic asset for the Chinese government, and when and if they ever feel like they can exert some pressure on them because they can't have WeChat or WePay falling into anyone other's hands other than themselves. So it'll always be a discount. It'll always be something of concern for us, but the actual holdco discount we've narrowed, which shows upside value per share. If you ignore the holdco discount, 28% and 31%. With the discount, we're about flat to slightly below, but we're pretty comfortable with this. With these intrinsics at the moment, just reflects all the risk and reward when we come to think about these two companies. That's pretty much it from me. So I'm going to hand over to Sean, who's going to do a little bit on the technicals, and then afterwards I can take some questions. Thank you.
Yeah, good morning, everybody. You can see the chart of Naspers. Yeah, this is until yesterday's close. So there you can see again, like I do every week, is it's trading above its moving averages. So the long-term and the medium-term trends are bullish. Even in the shorter term, I'll also call it bullish. It's trading above that long-term support trend line. But also you can see in the medium term is moving a bit of sideways. We call it a trendless market, roughly between 5,000 and 5,500 rand. But it's still very bullish for upside. So it is testing resistance levels. So it might break up higher. Only thing is there at the bottom, you can see the MACD indicator, the oscillator. It is trading in overbought territory, and it is trading below its just below its MACD indicator, its trigger line. So that's the only thing that's a bit worrying there. It's slowly trending down. But as Ross alluded to now, it's trading far above its intrinsic value. So yeah, it's an old recommendation. So we'll see what happens when it hits that resistance zones. Those are the highs. So we'll see if it goes up higher. Okay, go to the next one. Prosus, very similar chart. Very basically follow each other. As I say, again, very similar. Above its moving averages, still bullish in the medium term and long term. In the short term, the share price is still trading above its support trend line also, and looks set to retest that resistance around about 1,300 Rand level. And again, it's also still trading above its intrinsic value. And again, the hold recommendation, and very similar to the MACD indicator on Naspers. It is overbought. It's trading just below its trigger line. It is trending down. So yeah, a bit of a neutral strategy. Yeah, that's how I see it.
Thank you very much, Sean. Just hop back to the Naspers chart for me. Oh, well, the Prosus one does the same. It doesn't matter. It's bullish, and it's still bullish. There's no change there. And from what I said last week, if you see the size of the candles, They're getting smaller and smaller and smaller, those bodies. So it's becoming more and more uncertain whether this trend can persist. When you're typically in a strong trend, the candles seem to be of fair size. As you can see from the bottom there, all those green candles going up. There were some nice sized candles there, but now in the last couple of weeks, you can clearly see there that they all look like little crosses, which are called dojis in candlestick analysis. And a doji typically signals a turning point. So we could be close to a breather here, or maybe a pullback to some support for both these companies. Right. So I said in the beginning that I had a question from somebody to say that they needed a bit more detail on this on this chat, and I feel that keeping it informal is maybe more helpful, but I need you guys' input. So I'm going to launch a quick poll. Just click on one of the selections there. The selections are pretty much self-explanatory. One of the options there. So the options I said, would you like a deeper dive into the numbers in this discussion? Bearing in mind that Ross does explain and the analysts do explain how they get to their different intrinsic value scenarios. They do touch on the numbers from the company. They do tell you a little bit about what the business does. So I'm not entirely sure how deep you want to go into the numbers. But what I would like to know from the audience is if you want a deeper dive into the numbers, then say so. But otherwise, I said no. The analyst report has all the numbers. And that's the report that we distribute to you anyway, and that's available in our daily investment update. That is quite a comprehensive report with all the in-depth numbers that you could possibly want. Obviously, if you wanted more numbers, we can see how we can try and incorporate that for you. Then select yes. I often have questions on specific numbers, or then no. The high-level discussion of the research is sufficient. All right, so I am going to make my selection and then ask you guys to do the same. Right, give you a chance to push the buttons and then we'll go to the results. So far we've had 10 responses. 70% say the high-level discussion of the research is sufficient. Oh, there's some more oaks saying they've got questions on specific numbers. All right. Overall, I think it's a resounding victory for no. We'll keep the discussion casual and we'll keep it, try and keep it simple, because most of you said no, the discussion of the research is sufficient and the report has all the numbers, those of you who do read the report. So I suggest the 14% of you who've got more questions on specific numbers should maybe direct it at me, and then I can ask the analyst to respond if that's the case. Otherwise, if you don't get the report, which I suppose is also possible, then let us know, so that we can let you know where the report is published and that you can use that report. I see Alex's hand is up, and Alex, you dropped it, so I guess you wanted to ask, where do you get the report? Is that right, Alex?
Good morning. I believe it should be in my chat, but it's not refreshing. I'm just letting you know I can't see it.
Oh, you can't see the poll? Okay, that's strange, because we had 15 responses already. Yes, Alex, I'll check and see why this is happening. But like I said, yeah, all in favor of keeping it simple, having a light discussion and doing it. If there's any suggestions to changing the format, guys, please contact me and we'll consider it and we'll do it. Because we're here to inform you and help you make decisions around the stocks that you incorporate in your portfolios. So let's hop into the meeting chat quickly and see if there are any questions specifically about Naspers Prosus. I'll give you guys a chance to type some in there. I wonder, I think, let me see if I can find. Ross, have you got a copy of the report, perhaps, that you can bring up?
I can find it for you quick.
And then we can just flip through the thing and just show the guys who haven't seen it that there's a lot of detail in there. I think you got too many there, but I think I can get there quicker. You got it.
I'm trying to find the PDF for you. Just trying to think where it would come from.
Let me see. I'm also looking. Naspers Prosus. All right, I'm downloading the full report. Have you got it there as well?
Yeah.
I've also got it. Okay. All right. So if you flip through it, you'll see that there's a qualitative summary. It starts there with a summary of the numbers. It gives you all sorts of ratios. If you flip down, it gives you the analyst's thesis, which Ross explains in short. It gives you this qualitative summary of all the things that we consider and impacts the company. And then, of course, you see the charts that Ross incorporated in his presentation. So really a very comprehensive report. If you're not getting us, then just let us know, and we'll see why. But it typically does go to our clients, and it's available in our daily investment update as well. Alrighty, so yeah, thanks, Ross. It's a lot of information. Some of it way above my head.
There's a lot that goes in. Some of it sits in the appendix, which, I mean, there's a lot of numbers here.
Obi is asking a question that is probably on all of our minds. What is your 12-month price target? You're going to stick your neck out, Ross.
So our price targets generally feature. Our price targets are usually 12 to 24 months. We are in discussion together now to consider, now that these other businesses are changing or are finally turning a profit, all the value in the future is not going to only sit in the 10-cent value. So they're sort of reaching that turning point now. It remains to be seen, because obviously when you do a evaluation on these companies, you usually, a multiple is incorporated at some point. But when a company has negative earnings or negative EBIT, you can't use that unless you use the price to sales, which is a little bit too far up the income statement for our liking. But now they turn into a profit, so we're going to have to start having a look at what value we assign to these significant assets that are now forming part of Prosus and Naspers' valuation. On top of that, we also are going to start taking a more proactive forecast on 10-cent itself. So we have fiddled with the idea, because currently we use a market cap related 10-cent, because that's where all the value is set with Naspers and Prosus previously. But now we're going to start valuing 10-cent on its own, which is a bit of a tricky thing to do because of the political and the government's influence on these Chinese companies. You can see things like, I don't know, Alibaba, where it's got significant value, but Jack Ma gets disappeared for 3 months and the share price tanks. So it is an inherent risk with these Chinese companies. So we're going to have to take a look forward to that. But if we value 10-cent on its own, with a multiple approach, it's very cheap. So is Naspers. It's very cheap without all these provisos in the value. So I can't give you a 12-month to a 24-month stab, but there's probably going to be a change in our intrinsic in the near future, and there probably will be some more upside, just based on the fact that 10-cent is, I think it trades on a forward PE multiple of about 18. I'm just trying to cast my mind back now, which is well below what a tech company normally trades at. But on the other hand, Alibaba is also quite silly silly multiples, quite low, but it's been like that for a very long time. So I can't give you an exact figure, but our current intrinsic isn't. It is a 1 year to 2 year forward price. So sometimes we look great, sometimes we look stupid, but we think it's quite fairly priced at the moment.
Thanks, Ross. I figured, seeing that we don't have a clear answer here, let's have another poll. Let's ask everybody what they think where this thing is going. I said, it's currently roughly 5,000. Is it going to go down to 4.5? Is it going to go down to 3.5? Or is it going to go up to 6,000? Let's see what people say. I would place my bet with the trend continuing. I don't think it's going to stop just yet. It may pull back a little bit, but I wouldn't be surprised to see it slightly higher. Okay, let's see. 5 responses. Couple of conservative oaks. Only got 8 responses so far. Any further guesses, guys? Okay, Obi, as smart and as dumb as the oaks on this call is, we think 6,000 is the number. So I hope that answers your question. Yeah, let's see. I don't think we have any further questions, Ross. I think we can close. Yeah, there's no other questions. Guys, thank you very much for participating. We'll be... Oh, there's a new message. Hang on. Just before I close. Dennis says, if you suggest hold, that suggests it will move up. Dennis, no. If we really want to say it's going to move up, we would have placed a buy on it. Right? We would have said it's very fairly priced and it's going to go up if we had a total conviction that it was going to go up. When we say hold, we're sort of uncertain. We've got an intrinsic value that may be above the current share price, but there are other factors that we consider in that it's had a strong run. It could actually pull back. So a hold recommendation can be caution or mildly bullish, right? A very bullish recommendation would be the buy. All right. Vessel says the polls are interesting. Keep doing it. Vessel, I will. I'll keep including it next week. And then Karina says, thank you. Great research. Guys, reminder, if you don't get the research, call us. Let us get it to you. We'll be back next week. I don't know. Sean, do you know what's up next week?
PPC.
PPC. Okay, so we'll be talking cement next week. And we look forward to hosting you then, guys. And I'll keep the polls coming. Vessel, thank you for your insight, Ross. Much appreciated, mate. And thank you for your technical bit, Sean. It's refreshing to see the charts. I like the charts. We'll see you guys next week, same time, same place. Have a fantastic Thursday. Cheers.
Very much, guys.